What happens when you don't stay on top of bills and how it quietly kills cash flow. All right, tradies, today we're talking about something that doesn't feel urgent until it really is. What happens when you don't stay on top of your bills? Not because you're irresponsible, not because you don't care, but because you don't have visibility. And when you don't have visibility, paying suppliers too fast, paying them too late, or constantly juggling and hoping it works out. And that quietly kills your cash flow. This is the Hey Tradies podcast, and I'm Amanda from Virtual Coastie. And today we're getting into what's really happening behind the scenes when bills aren't managed properly and how to fix it. The real problem, no visibility. When we take on a new client, the biggest thing we see isn't laziness, it's zero visibility. Bills are sitting in emails, some are in Fergus, some are in Xero, some are in someone's memory, and the business owner is carrying all of it in their head. And they're trying to remember, did I pay this supplier? Was that due this week? Did that statement come in? That mental load is exhausting. And when you're running jobs, managing staff, quoting, trying to grow, you don't have space for that. So what happens? You either pay as soon as the bill comes in, before you've even invoiced your client, or you ignore it until the supplier chases. Neither is good for cash flow. Paying too fast, why it hurts. This one surprises people. Paying too late is obviously bad, but paying too fast can be just as damaging. If you pay a merchant the day the invoice comes in, but your client hasn't been invoiced yet, you're funding that job yourself. You're using your working capital instead of using your credit terms properly. Good credit terms exist for a reason. They are there to allow you time to do the work, invoice the client, get paid, and then pay your supplier. If you skip that gap, you create pressure on your own cash. Multiply that across multiple jobs. Now you're constantly tight. Paying too late, the reputation risk. Now let's talk about the other side of it. When bills aren't entered properly into your system, you don't know what's due. So you pay when you get chased. And while it is not intentional, your suppliers start to notice. You get a reputation. And reputation matters. Because when you need urgent materials delivered on site, a favour pulled, extended credit terms due to slow paying month, they remember whether you're a good payer or not. Business, like most things, comes down to communication. If you build a reputation as someone who communicates and pays consistently, suppliers work with you. If you build a reputation as someone who pays when chased, that relationship tightens up very quickly. The risk grows with size. The more team members you have doing work, the bigger the risk becomes. More jobs equal more materials. More materials equal bigger supplier accounts. And on top of that, many tradies aren't just dealing with big merchants. They've got subcontractors, smaller specialist suppliers, and contractors supporting them. Those smaller businesses rely on being paid. If you're constantly chasing your tail, you create tension across your whole network. A real example, staggered bill system. One of our drain laying clients has always valued his supplier relationships. So here's what we do. On the 10th of the month, we prepare all the upcoming payments. He knows exactly what's going out. It's included in this cash flow report. We stagger payments based on priority and relationship. Subcontractors are always paid first on the 20th. Smaller invoices under set thresholds are paid next. Larger merchant accounts are staggered across the month. There's even a daily bank payment limit to work around, so we plan for it. Suppliers know when to expect payment. And because there's communication, there's trust. He also has one very large customer who pays on the first of the month. If this falls on a weekday, so some months cash flow gets tight, and because of the relationship built with his main supplier, we can pay part by month end, communicate daily, clear the balance immediately when the client pays. And that's not luck, that's systems and communication. GST, the quiet impact. Now, let's talk about something a lot of tradies overlook, GST. All of our clients are GST registered. When you enter bills properly into your accounting system, you reduce your GST liability. Because GST isn't just paid on income, it's offset against expenses. If bills aren't entered correctly or on time, your GST can be higher than it needs to be. And that's real money. Proper bill entry isn't just admin, it directly affects how much tax you pay. What looks good? Good bill management looks like this. All suppliers are entered weekly, clear visibility on what is due and when, using credit terms intentionally, cash flow forecasting included in decision making, staggering payments schedules where needed, communication with suppliers if timing shifts. You're not reacting, you're planning. One action this week. If you do nothing else this week, log into Xero or your accounting system, an age payables report, look at it. What's overdue? What's due soon? What's sitting unentered? If you don't trust the report, that's your first problem to fix. Block 30 minutes weekly to enter and review bills, or get someone to own it. Because carrying it in your head is not a strategy. Not staying on top of bills doesn't disappear overnight. It quietly strangles cash flow, damages relationships, and increases stress, and hurts GST positioning. You don't need to be perfect, you need visibility. And once you've got visibility, you can plan ahead instead of panic. So if you'd like to take this part of the admin and accounts role off your plate, we'd love to help you at Virtual Coastie. So jump onto our website, virtualcoastie.co.nz, and book a discovery call and see how we can help you. Catch you in the next one.